Hello and welcome to another update video about Dogecoin. We will start on the long-term chart for Doge and then we take a look at the shorter time frame. Doge long-term, it's a bit tricky, this chart. I wouldn't fully rely on it. There are two wave counts. I'm following here primarily the yellow count. In the yellow count, the move formed a wave 1 initially into the 2018 high. Then a wave 2 pullback into the March 2020 low, a strong third wave rally, very strong third wave rally into the April 21 highs, a fourth wave pullback into the June 22 low. Yeah, and based on the condition that this low is holding from June 22, which was at 4.9 cents, we could now be in the fifth wave rally to the upside. Fifth wave, however, could be a diagonal pattern. That's at least how it looks to me. Very, very messy structure here. You can see clearly that we have a three-wave move up as a wave 1. There are other ways to, I could, if I really wanted to, put the fourth wave here, or this fourth wave, and just make it easy for myself and call it a truncated wave. So that's possible. Sometimes these don't get the last low, but still I can count the fourth wave here. But it just, yeah, it's not reliable. So I rather prefer it like that. We have a wave 1 to the upside and 3 waves, wave 2 to the downside. Long-term target, or well, ideally it would get above the third wave in this bull run, right? It's ideal. So we talk about like $1.30 plus. Obviously, please understand that the initial rally here, I'm not sure how reliable it is in terms of fibs, because that isn't really proper data down there. So if I base the measurement of targets on that, then looking for the 61.8x or 38.2 extension first gives me 146. The 132 level comes from a different measurement, but sort of around 130, 140, there seems to be a target range. Now, if we look at this structure, the initial wave 1 isn't really long enough to project out to that target. The wave 2 was too low. So the question is, the third would need to be quite extended actually, all right? However, the microstructure suggests that we might only need one more high in the third wave to 27 cents. Because it could just be an A, B, C, and A, then a B wave pullback, and this C wave could be 1, 2, 3, 4, 5. So I'm currently tracking here a fourth wave pullback. And if then one more high occurs, we have 5 waves in wave C of 3. And then we could get a 4, 5, and that might be it. But ideally, it gets above the third wave high. So the question is, something seems to be off. So I'm very open to change my perspective. It is, for example, possible that this third extends quite a bit. And actually, all of this is just forming a larger A wave. After one more high, we get another B wave pullback and then a C wave, and it really extends quite a bit. So they are just, that these wave counts, they are like dynamic, right? They are alive, like the markets are. They are not static. So I'm just saying this might lead to an extension. Now let's go to the shorter time frame wave count. Here we can see that why I'm tracking this fourth wave pullback with one more high to come. But yeah, and then I assume that afterwards we get a larger degree wave 4, but it could just be a B wave pullback, as I just explained. That's not so important right now. First of all, we'd like to see if we can get one more high. The only relevant support level really that I have for this range is the 11 cent level. As long as we're holding above the 11 cent level, the overall focus can be on higher in this current structure I just showed you. In the very short term, it's possible the fourth wave actually bottomed already, and we're already in the fifth wave. The condition here would be clearly that we're holding the Monday, the 13th of May low at 13.6 cents, because a break below the same will likely mean that we test the 11 cent level again, right? At least it's not reliable that we've bottomed. I'm treating it as such. Like, I'm leaning towards the yellow count, but all I can say about this, because this rally isn't impulsive, that as long as we're holding this low, we could expect a C wave, or at least I'm watching for a C wave to 20 cents. This is not very clear. We're not moving in, with a lot of upside momentum, but that's the low that needs to hold for that potential to realize. And then once we have the C wave of wave A complete, we might get a B wave pullback and then a C wave rally. And this resistance area might then act as support as we go higher. That's sort of really what I'm watching for, which means in the very short term, the 13.6 cent level is really important as invalidation point, and the 20 cent level is important as next upside target. There is a Fibonacci resistance area all the way up to 16.1 cents, and structural resistance is to be found here around 17 cents. That's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.